Japan's economy bounced back, supporting case for more rate hikes. Bank of Japan forecasts solid economic recovery will help inflation and could justify raising interest rates further. Japan's economy expanded by a much faster than expected annualized 3.1% in the second quarter, rebounding from the slump at the start of the year thanks to a strong rise in consumption and backing the case for another near-term interest rate hike. The Bank of Japan had forecasted that the solid economic recovery will help inflation sustainably hit its 2% target and justify raising interest rates further after it hiked them late last month in its continued quest to exit years of massive monetary stimulus. The increase in gross domestic product called the GDP compared with the median market forecast for a 2.1% gain and followed an upwardly revised 2.3% contraction in the first quarter, government data showed on Thursday. The reading translates into a quarterly rise of 0.8%, beating a 0.5% increase expected by the economists in the Reuters poll. The results are simply positive overall, with signs for a pickup in private consumption backed by real wage growth, said Kazutaka Maeda, an economist at Meiji Yasuda Research Institute. It supports the BOJ's view and bodies well for further rate hike, although the central bank will remain cautious as the last rate increase had caused a sharp spike in the yen. The private consumption, which accounts for more than half of the economist output, rose 1% compared with the forecast for the 0.5% increase and the first gain in the 5 quarters. The private consumption had been a soft spot in the economy, which has stuttered over the past year as households struggle with the rising living cost, blamed in part on higher import prices due to the weak yen. The public discontent over rising living cost was one of the factors that prompted Japan's Prime Minister Fumio Kishida to announce that he would resign next month. The consumption recovery. Basically, we expect consumption to continue to recover, said Kengo Tanahashi, economist at Nomura Securities. In addition to the fixed rate tax reductions starting in June and subsidies on electricity and gas bills starting in August of this summer, the spring wage talks are strong again this year, and we believe that the increase in income will boost consumption. An influx of tourism has also helped boost retail sales in Japan. Fast Retailing, owner of clothes brand Uniqlo, highlighted the strength of the domestic market in its most recent earnings, lifted by the surge in duty-free sales. Spending by tourists is expected to reach 8 trillion yen, $54.74 billion this year, according to the government, which sees tourism as the important growth driver in the economy, long hobbled by the aging population. Capital spending, a key driver of private demand lead growth, rose 0.9% in the second quarter, matching an median market forecast in Reuters poll. External demand or export minus import knocked 0.1 point up growth, the data showed. The BOJ raised the interest rate last month and detailed the plan to taper its huge bond buying huge bond buying in another step toward phasing out each massive monetary stimulus. Japan is the global outlier in raising rates, as most major central banks, including the U.S. Federal Reserve, have begun to ease policy or are moving in that direction. The first rise in consumption in more than a year should encourage the Bank of Japan to press ahead with another rate hike later this year, said Marshall Tilley-Liant, head of Asia Pacific Capital Economics.